Hello everyone, thanks for checking out my video. Before I move on, just wanted to inform everyone that there will not be any video next week, so I will try to cover as much as I can this week. Anyway, US interest rate has risen to the highest level in 22 years, yet the stock market is unfazed as it continued its rally with three major indices ended last week in the green, and S&P 500 is just within 5% from its all-time high. In short, investors were cheering because the latest PCE data showed us that inflation keeps cooling, and stronger than expected earnings reports from megacap companies are supporting the case that the US could avoid a recession. But here's a caveat, we are about to enter two of the most bearish months, which are August and September. So what does this mean for the stock market? Stay tuned as we discuss them in this video. All three major US indices ended the week on a high note after a string of big tech earnings, economic data, and announcements from the Federal Reserve boosted investors' confidence in a soft landing for the US economy. S&P 500 even hit its highest close since late March 2022. Very quickly, let's dissect the good news. First of all, the central bank has raised interest rate by another 25 basis points, which is in line with expectation. So no surprise for the market, that's good news. And then, Jerome Powell said that the Fed is not forecasting a US recession now, and that they do have a shot for inflation to return to their 2% target without high levels of job losses. This again is definitely a good news for the market. Then, throughout the week, we had Microsoft, Google, Meta, Intel, Roku, P&G, Visa, McDonald's reported decent earnings. Finally, on Friday, PCE data, aka Fed's preferred measure of inflation, showed that inflation has continued to ease. The gauge showed that the core PCE rose 4.1% from same period last year. This is the least since September 2021, and lower than the anticipated 4.2%. Which of course wowed the Wall Street, and we had a nice rally on Friday. This week, earnings season will remain fierce with Apple, Amazon, Shopify, Starbucks, Pfizer, PayPal, AMD, etc. reporting their earnings. And these are just a few of the hundreds of companies on tap this coming week. So yep, it is going to be another big week of earnings. Personally, I will be keeping an eye on Apple as it is approaching the big $200 mark. Good earnings should push it to this level. More on this later in the technical analysis segment. On a separate note, Jerome Powell shared that no decision has been made yet on whether to hike rates again at the upcoming September FOMC meeting or to keep them steady. Therefore, in the next few weeks, you can check out this CME Fed Watch tool to see the probability of a rate hike versus a pause, to keep yourself updated on the expectation. Reason being, typically if the Fed does something out of market expectation, the market tends to reflect violently for both up and down directions. As of last Friday, the probability of a pause in rate hike is at 82%, whereas the chances of another new rate hike came in at 18%. Okay, moving over to the technical analysis section. Well, the broader market S&P 500 is not showing any sign of retreating. Check out this uptrend channel marked by the green dotted lines. And then as we zoom out, you can see that SPY broke out of it, did a textbook retest of the line, and bounced up. That's bullish in my opinion. In fact, last week I have already shared that we can expect SPY to retest the upper trend line and to watch out for 452-453 levels. I also shared that good earnings from tech giants could push SPY above it. So there you have it, SPY went above. Do tap the like button if you have benefited from this. Right now, the next resistance level is 460. Therefore, this week I think we can expect SPY to test 460 if it stays above the upper green trend line. In my view, Apple will be the key to whether SPY can close above 460 or not. 460 is quite an important level. If we can close above it, I think the probability of charging towards all-time high of 468 is quite high. In terms of downside, as mentioned, the green upper trend line support needs to hold. Actually, on this, can you see the candlesticks line up so nicely on the trend line? Don't you just love technical analysis? Anyway, if this trend line does not hold, it means SPY will fall back into the channel. Not to scare you and not saying it will happen, but if you look at the channel, the downside potential is massive, which is as low as 417 to 420. But honestly, I think it's quite a long shot for the bears to hit the bottom of this channel. So realistically, at least for the next few weeks, if the green trend line breaks, the 20 moving average, which sits at 448, will be a more realistic target for the bears. So far, SPY has flirted with this moving average on many occasions, so don't be surprised if we hit this moving average again if the support trend line breaks. From here, bears may just take it down to fill the gap between 443 to 445, after which 440 should provide a decent support. But again, to be honest, my take is in the short term, say about 2 or 3 weeks, I don't see SPY breaking below all 3 support levels, which are the 20 moving average, the gap, and the 23.6 Fibonacci retracement level. It could maybe only test the 20 moving average. That's just my wild guess, so I don't know, maybe you can consider selling puts near the gap area? Not financial advice, okay? Moving over to Apple, who is going to report their earnings this week on 3rd August. Apple has been moving sideways for a month already, since late June. It has been trying to break free from this sticky 195 level, but can't seem to do so. And again, somehow, the charts are always setting up so nicely for a big event, be it CPI, earnings date or whatnot. I mean, as you can see, Apple closed right above this 195 level, teasing investors to tell them that I am going to break above the level, but not giving any confirmation yet. Remember what I have always shared? We need about 2 or 3 green candles above a key level to get some form of confirmation. Therefore, I think this week is the week where we can get some confirmation on whether Apple wants to go up or not. Once again, I have shared this many times, if Apple can close nicely and decisively above this 195 level, we can expect Apple to finally hit 200 level. But if Apple's earnings do not excite investors, then there is a very high chance we will test that 20 moving average again, which sits around 192. Remember, I also mentioned that this moving average has been a decent support so far. Apple seems to always bounce off this line. Therefore, if you believe in Apple's story, then you can consider trading the potential bounce up from this moving average, with stop loss below it. Below this moving average, I would say 187.5 is a fairly decent support, followed by the 50 moving average at 185. But honestly, for Apple to fall to this 185 level, it's a super uphill task for the bears. Because if you zoom out the chart, Apple hasn't tested this level since January this year. So I don't know, if there is a pullback, maybe one can consider selling a put option near this level. Again, not financial advice. Let's now move on to Tesla. I am loving this stock, especially for my option trades, because it's like moving at this 240s, 250s range to say low 280s range, except for the 3 isolated candles of course. And last week itself, it is consolidating at a tighter range at around 255 to low 270s. And personally, I think it won't be long till Tesla breaks out of this consolidation zone. But whether is it up or down, let's look at some of the key levels for confirmation. First of all, this 255 level seems to be a decent support level as Tesla tested it 3 times last week, but bounced off this level. In fact, in my last video, I shared to watch for this 253 to 255 support zone. True enough, this has proven to be a key level for Tesla bears to break. Again, this week, watch this area. If it breaks, Tesla can be easily flushed to 240s level, with strong support coming in at around 244, as that's where there is a double support formed by the 50 moving average and Fibonacci retracement level. From here, if paper hand investors start selling their shares, then we could fill the gap between 235 to 240. This is where I will get excited. At this level, I will consider either picking up some shares or selling a cash secured put with a strike price lower than this level and reap some good premiums. Or I may do both. Let's see how Tesla moves. Okay, before we talk about the upside, hey viewers, there are about 64% of you who have watched my video in the last 28 days but have not subscribed. I really hope I can hit the 1k subscriber mark by the end of the year, so do help me out if you like my content. Well, a small good news is that this 63.9% is better than last week's 64.5%. So thank you to those who have subscribed recently. But of course, a huge thank you to those who have subscribed earlier. Meanwhile, if it is within your financial means, do consider buying me a coffee which will cost you 4 Singapore dollars, less than most of your bubble tea again. I have changed the currency to Singapore dollars as most of my viewers are from Singapore, so I hope that will help you save the conversion fee charged by the credit cards. Lastly, you can also use my referral links to sign up for Weibo, YouTube, Instagram, Shopback and whatnot to support the channel at no cost. Okay, in terms of upside potential for Tesla, obviously it's quite a lot because Tesla is still some distance away from its all-time high of 414. Many other mega cap tech stocks were already hitting and creating new all-time high every other week. Anyway, the first obstacle for Tesla is this downtrend line. It needs to break above it and if possible, go above $300. Then it will unlock more upside. Just don't be like the other time, break above for 3 days and fell back down again. Interestingly, the downtrend line and the support line of around 255 are converging, so as this range gets tighter, the higher chance that Tesla will break out of it. So if the breakout is to the upside, the chance of filling that huge gap from 280 to 289 is quite high. And to add on, the more we stay above this Fibonacci level of 264, the more bullish Tesla is, then the higher chance the breakout is on the upside. Lastly, it seems like there is a bullish divergence forming on the RSI. Previously, there was a bearish divergence and Tesla fell. So now with the bullish divergence, will Tesla rise? Well, nothing is guaranteed, it's all about probability. Hope you get what I mean. Next up, Google. I don't think one needs to be a rocket scientist to see that Google is extremely bullish now. So in my last video, I shared that positive earnings could potentially bring Google above 125 and finally stay above it. That's when 130s will come into picture. And there you have it, we got our 130s range. As I zoom out the chart, I notice Google is entering this consolidation zone with the upper end at 145. Okay, before you get too excited and think that Google will just charge towards 145 this week, just want to highlight that there is a bit of resistance at around 137 to 138 area. Just right above it, we have that gap between 139 to 140. Therefore, I would expect Google to face some resistance around this area. Maybe a slight pullback before heading up towards 145? My wild guess. On the downside, the gap between 123 to 128 will act as a support. Specifically 125, which used to be a major resistance, should offer a decent support. Below that, we have 120 as the next support, and another crucial one would be the purple downtrend line, which is around 114 to 115. So yep, quite a number of support levels below. Therefore, perhaps one can use them as a reference to sell some cash secure put. Not financial advice, okay? But I personally will be looking at them. Okay, moving on to the options trading segment. This week I will cover 3 trades, 1 that has expired and 2 that are expiring this week. Stay till the end of this segment as I will be sharing with you guys the spreadsheet that I use to track my option trades. Alright, first up is this put contract that I sold on Google with a strike price of 113. Basically, Google did not even come close to hitting it and it staged a massive rally. As a result, this contract expired worthless last Friday and I got to keep the full premium. This particular contract was sold on 16 June as Google was consolidating within a specific range. And after I sold it, it was still consolidating. So, again, if you recall what I have shared, consolidation of a stock is good for option sellers like me. Anyway, more info on the thought process behind this trade can be found in the link at the top. I really hope by sharing all this train of thoughts behind each trade are useful info for new option traders out there. Please give a thumbs up or comment below if it's helpful. Next up, still on Google, it's this covered call that I have sold some time ago. One that I kept rolling and rolling. Anyway, if you are new to option trading, the loss you see on the screen is not really a loss yet, unless I decided to take the loss. Otherwise, it's just paper loss. Once again, it looks like I have to roll this option this week as it is expiring on Friday, 4th of August. A quick recap, I first sold this covered call with a strike price of 110, then I rolled it up to 113 and rolled it again to 116. Therefore, the plan for this week is I will try to roll it way further out so that I can just leave this trade untouched for a while. That being said, I have to bear in mind that year end usually has this center rally. Therefore, the chance of the big pullback to my strike price could be low. Let's see how it goes this week. I have to check out the premium as well. Finally, I have another option contract on Google that is expiring on 4th August, and this is a cash secured put. The strike price is 111, and I am quite sure this contract will expire worthless. Unless, of course, Google crashes from 132 to 111 this week. Anyway, this trade was sold on 30 June. Again, I will link the video at the top. Do check out my rationale behind selling this cash secured put. Meanwhile, I do have a few other option trades in the green now, but I will not go into the details for this video as I have covered them previously. So do stay subscribed to my channel if you wish to stay updated on some of these trades. Okay, not sure if anyone is interested, I have decided to share the spreadsheet that I use to track my option trades. It's just a very simple Excel sheet, so I am gonna share it for free on my Ko-fi page. Feel free to download and modify it, improve it to your own liking. And sorry, a bit of sales pitch here. If you are interested in my real trades, maybe you can consider paying a nominal fee to purchase the spreadsheet with my trades in 2022. But before you purchase, I thought I want to be transparent a bit. So I basically started trading options only in April 2022, and therefore the number of trades in this file is not a lot. I am talking about like 20 plus trades. To be exact, it's 23 trades. And oh, I am not a pro. Unlike those option gurus, I don't make $300 daily from options trading or $5,000 or $10,000 in a month. Therefore, if you are okay with a peasant option trader like me, who is only making small passive income from options trading, then you can consider purchasing the spreadsheet. To make it even more transparent, here's a screenshot of what I have earned from option trading last year. About 3.8 to 3.9k SGD, depending on the exchange rate. Not a lot, but yeah, I will still take it. Anyway, I am selling the spreadsheet at 399 Singapore dollars, less than the cost of your bubble tea and definitely less than a cup of Starbucks coffee. That said, no obligation to purchase, okay? As for 2023 trades, I am still thinking when and how should I release them. Maybe I can release the trades for the first half of the year first at the same price, or maybe if I can reach 1k subscribers soon, I can release them for free for a limited period of time. I'm not sure yet, let me think about it. Some end thoughts for this video. Interestingly, according to Barclays' note to their clients, investors were flocking to equities last week with inflows of $10 billion to US stocks. This shows that lots of money continue to flow into the stock market despite the massive run-up since the start of the year. Well, it appears to me that day by day, month by month, investors are believing that the Fed is winning this inflation war without causing massive job losses or pushing US into a recession. Personally, I think this easing of inflation, avoidance of a recession, AI advancements, decent corporate earnings could potentially push S&P 500 towards a new 52-week high. And just to share with everyone, more than half of the companies on S&P 500 have reported their earnings as of last Friday, and close to 79% of them have surpassed analyst expectations. But of course, as the stock market rally continues to advance, there will still be some jerky and choppy actions here and there. We have seen that quite a fair bit, especially during intraday, where you see the stocks making whipsaw movements. But if you ain't a trader, this should not affect you. Because when you take a step back and look at the indices or some of these individual stocks on the weekly and monthly basis, they just kept continue to grind higher. Therefore, such daily wild swings should not affect long-term investors. The only issue here is, when do you step in to pick up shares given that the stock prices keep rising? Well, all I can say is pullbacks. During moments of pullbacks, it's the time to pick up some shares. Not financial advice, of course. For myself, I have actually stepped in for Microsoft last week when it had a little pullback. By the end of the week, Microsoft had already climbed higher than my entry price. Basically, this shows that it is important to have a plan in mind, set out your entry prices, and enter when the stocks reach those prices. There is no way you can time the bottom of the pullbacks. Alright, that's all for this video. I will see you after 1 week's break. Please help me promote this video by tapping on the like and subscribe buttons. Do comment something below to boost the algorithm too. Thank you.